Thanks very much for joining me. My name is Ollie Hesketh. I run the Australian office of NMG Consulting. And I wanted to spend a few minutes today just talking through a Trialogue that we published recently because we know from the stats that clients were really interested in it. And that was around industry funds versus retail funds and the ongoing war that's been waged. Retail super should be having its time in the sun. Retail funds are targeted squarely at pre-retirees and retirees with higher disposable incomes, and the demographic bulge of the baby boomers means that part of the market has been growing really quickly, and balances have been getting bigger over time as well. But the opportunity seems to be passing the funds by. So retail funds have been giving up about 1% of market share every couple of years for quite some time now. And on the flip side of that, industry funds took 1.5% of market share in the last 12 months alone. Now, to put that into context, if retail funds had maintained their share over the last 5 years, they would have an extra $120 billion in assets, and that amounts to about $500 million in revenues that are not in the retail system. So we're talking about a big shifts here, even though changes of 1% or 1.5% in market share don't sound like much. So digging down underneath those numbers to see what's going on in a little bit more detail. So where have industry funds been winning? If we look at the two main drivers of growth in the system outside of investment returns, that's employer contributions and member contributions. Now, employer contributions have been the mainstay of industry funds, given their strong relationships with employers. And from that strong starting position, they've continued to grow their share. So if we look at just the flows taken by retail and industry funds have increased their share of employer contributions from 52 to 60% over the last 5 years. Now, on the flip side, member contributions, which require people to put their hand in their pocket and put their own after-tax dollars into the system, have been really dominated by the retail funds, because that's the part of the market that they have targeted for their member base. But this isn't going so well. The industry funds are encroaching on their territory here. Industry funds have grown their share of member contributions from 20 to 35% over the last 5 years. And I think the really interesting thing there is in the 12 months to June 17, there was a last chance to put a material amount of money into superannuation, and there was a lot of commentary about it being an advisor-led strategy. But in that year, industry funds managed to increase their share of member contributions as well. So they're obviously doing quite a good job with member engagement. So how are industry funds managing to win on almost every metric? Is there one magic kernel that is the secret to their success? Unfortunately, not. It's actually quite an unexciting story. Industry funds have just been steadily improving what they do each and every day. They're completely focused on superannuation, and we see day in, day out things improving across digital. So they've launched a lot of funds have launched a digital engagement capability, and let's not pretend anyone from Silicon Valley is flying to Melbourne to see what the funds are doing in digital. It's not globally groundbreaking, but it is steady improvement over time. Likewise, in advice, funds are rapidly innovating what they provide in terms of financial advice and guidance to their members, and once again, there's nothing groundbreaking here, and we don't think that most funds have cracked it yet, but there is steady improvement, and that shows results. So what have retail funds been doing at the same time? I think it's fair to say, with a couple of exceptions, that most of them have been standing still. So whilst industry funds have been making slow but steady improvements, the retail funds, haven't really been able to make the same progress. Their investment dollars have been spent on regulatory compliance by and large. So thanks very much for your time. If you have any questions or would like to subscribe to the Super Funds Review, don't hesitate to get in touch.